Indy, did you miss me? Hey, what's happening? It's Angie, Ange. You usually catch me on the morning hustle 6 to 10 in the morning if you're waking up that early. But I also give you that Money Making Monday, okay? High 96.3, another edition of Money Making Monday. We back at it again for 2021. And man, it has already been a wild, wild west in the stock market. Quest. Shout out to all you newcomers, everybody that's opening up them Robinhood accounts or E-Trade accounts, Fidelity, whatever your thing is. We got so many new people in the stock game right now. They call them retail investors. And I think it's awesome. It's dope that I get to talk stocks with people because I've been doing this thing for about 15 years now. Come from a family of financial advisors and CPAs. And so the stock market has always been something that I've utilized to help establish and grow my wealth, my savings, you name it. Primarily, I like to use mutual funds. I like ETFs because I'm not that good at sitting around researching stocks and following charts and all that. But I'll tell you who is my sister. And actually, my sister and I, we started a weekly newsletter called Stock Snoops. So make sure you subscribe. You can go to stocksnoops.com. But here on Hot 96.3, for my whole indie crew, we like to do something called Money Making Mondays. And, Money Making Mondays is really about sharing our experiences, right? So I'm going to give you some of my experiences and I'm going to tell you some of the stuff that I've done that's worked, what hasn't worked, what has worked. And then I hope that you do the same, man. Share, comment below, respond, call in, whatever. So I want to talk a little bit about GameStop and what's happening with GameStop, AMC, and certain individual stocks that have been running up to the moon and back, right? And then they starting to fall back down. And of course, Robinhood got involved and shut that down as well. So this is exactly why I'm not an individual stock person. I like to get a bag full of stocks in one. I like to be automatically diversified. And that's because, over the long term, I've found that I've made the most gains by consistently putting in to things like mutual funds, to things like ETFs, 401ks, IRAs. And there are a lot of people that will argue anybody can jump in the stock market. And yes, in fact, you can. But what you've seen with GameStop, what you've seen with AMC are prime examples of what happens when you're not actually an informed investor and when you don't understand what's going on. Because a lot of times what happens is we have FOMO, fear of missing out. Right? You start seeing that stock going up, 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 and everybody's talking about it. Then you jump on it and you done bought it at $100. And hell, you still probably could have made money, right? If you held on until it went to 200, 300. But there's a lot of people that bought at 200, 300 or bought high. And that thing comes right back down because when you really look at GameStop's fundamentals and you look at the company overall, you could tell that it should not be valued at that price. And also that it was being run up, kind of like a pump and dump situation. So there's some people who fell for it, right? Some people bought and you lost. Some people bought and you won big. Congratulations. If you won big and you cashed out, just be aware you got some taxes to pay. Okay. If you got left with the bag and it's like, dang, I lost out. No worries, because actually taking losses in the stock market isn't that bad when it comes to your taxes, because you can write those losses off with some tax harvesting going on. So again, all of what I'm saying, if you're listening to this and you're saying, dang, okay, I hear her, but I don't know what she's talking about or what that means, it's another reason you need to subscribe to Stock Snoops. Go to stocksnoops.com, check out our weekly newsletter, lots of good information in there, and you can see some of the individual stocks that we are looking at. So I know I told you guys I'm into mutual funds, ETFs, 401ks, things like that. But my sister, who is all about the individual stocks, she's very good at reading charts. She's very good at doing research. She's going to sit there and listen to the calls, and she's going to follow all the earnings reports before she makes decisions. A lot of times I just kind of listen to her, or sometimes I just pay attention to what's happening in the media. When I see something's about to pop, I usually hit her about it. She invests and she does really well. With that being said, couple of things that we've seen do really well for us was AMC. I saw AMC at $2.75. I didn't know what was going on with the whole running things up, but I did feel like it was at a good price. And I saw that they had refinanced some debt or got a little funding to try to stay open. And I do believe that ultimately, when all this is said and done in the market, AMC will be back. And because of that, I said, hey, at $2.75, it's not a bad price. And then when they ran that thing up to about almost $20, that was awesome. But we still held on to quite a bit of our AMC stock. And that's just because it's also a long-term play, long-term hold. But it didn't hurt to cash out on some of the profits while the Wild Wild West was doing what the Wild Wild West does in the stock market. With that being said, whether you won big, whether you lost big, don't let that discourage you. And don't get too big headed either, thinking that you are now an expert, because you did do well. Remember, being an informed investor is the best investor, and there are many ways to invest. You don't just have to jump in on one particular stock. You can look at a basket of stocks. You can look at the S&P. You can look at the indexes. There are just multiple ways. And so I encourage you to explore all those ways, and happy investing. All right. And don't forget, subscribe, stocksnoops.com. And I'll holler at you for another edition of Money Making Monday. That was long.